Gold up 1%. Stocks here just opened up. Actually lower here. NASDAQ pushing lower here on the 15-minute chart. Take a look at this. Here's your US New York Open. Big flush to the downside here. Let's see if it, I mean, the thing is with this market right now, the expected daily move is still pretty high. You've got a VIX up here today at 21.67. So you're still expected to get some sharp volatility. And I want to come back to this because this has been something that's been hot on my watch list here. I talked about it a lot yesterday. Look, I'm already long gold. I'm trailing stops. There's not too much more for me to do on gold. But for stocks, for indices, I am very interested in looking for price action to follow through. Right, so you had 2 days up, right? Let's take a look at the price action, right? Price action for the S&P 500, or we could do NASDAQ. Let's do NASDAQ because NASDAQ is more fun. NASDAQ, wicks on the bottom, 1-2 days up. Nice. Okay, that's a good start, but sellers are still in control of this market. On a technical basis, what I am and have been looking for is follow through, right? I'm going to get rid of this trend line. Keep it really simple. We broke really key levels of support. As soon as these levels started breaking, it's just been waterfall effect, right? Selling, selling, selling. We could just waterfall through the lows again. Like, that's totally possible. I actually hope from a long-term perspective that that does happen because I could get some stocks at cheaper prices. But from a technical basis for long setups, I mentioned that what I am still waiting for is this kind of move, a break to reverse some of this bearish structure that the market has been putting in here, right? We've been failing at support levels. We want to start to see, at least the way I want to see it form, I want to start to see resistance failing, right? Support has been failing. This is what we talk about a lot in terms of price action, keeping it really simple. We don't use anything fancy. Like I said, I'm not a big fan of the, liquidity sweeps and fair value gaps. I'm personally not a big fan of that stuff. I find it to be overcomplicating what should be really kept simple. We have key levels of support, right? Resistance. Let's see those levels start to break with some momentum. And in my opinion, more importantly, do the fundamentals make sense? Last week, we had some good data. Inflation data cooled, and I actually think that the risk to reward on stocks looks quite good. What's keeping me back on the score, which I've been talking about here, let's filter for indices just so we can keep our radar here tight, is trend, right? The momentum here is still in favor of the sellers. That's kept me out of the way of getting involved in the indices. But seasonality looks okay. Retail positioning, very bearish. That's a contrarian bullish signal. COT data, we saw institutional money buying the dip last week. Very interesting, right? We could track that through the COT data. Then we take a look at inflation data. Came in really good last week. You had softer PPI, softer CPI, right? Softer as in cooler inflation data, less inflation than what was feared. So I put all that together and I say, look, if there is a technical breakout for the S&P and the NASDAQ, I will be buying that. But we're not quite getting it, and price action's not cooperating yet. So, I mean, NASDAQ's down 1.3%. I would say that's still within the range that we kind of expect right now. I'll show you that. We could, here's a little fancy average true range. Let's get our average true range. And let's just use a 7 so we can kind of take a look at this recent period. What are we expecting in terms of daily movement? So the average true range, I'm going to change this color so you guys hopefully can see it a little bit better on your screens. Okay, so the average true range just tells you in the last seven days or whatever your selected period. I've selected 7. No magic, no crystal balls, just simple stuff. In the last 7 days, on average, we're seeing about a 500 point move. So let's just take that. Okay, is today's move within 500 points? Yes. 500, greater than 500 would be down to here. So if you get something like this today, then that's concerning. That's acceleration to the downside. But anything before this is just normal, expected probability, expected move for the day. Okay, So I'm not freaking out about a 1.4% drop. Now over here, yes, I would be freaking out about 1.4% move, or not freaking out, but I'd be more taking that seriously because the expected move back here was 250 points. So, you know, you want to keep in mind ATR, average true range, is a really cool indicator for this. You can say, is this move today expected kind of movement or unexpected, more violent movement than anticipated?
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
Gold, just off its highs here. Take a look at the 1 hour chart. So I have my stop loss. So just before I move on to gold for a second, let me just kind of finish out my thought. NASDAQ, like I said, I want to see the lows get held here intraday. I'd like to see breakouts here. If you start to see this price action, constructive, working through these resistance points, I would personally be looking for longs. So I like that setup on the NASDAQ quite a bit, and the S&P 500, I like both. But you're seeing a little bit of pushback here from sellers. So I don't have a position on the NAS or the S&P, but actively looking. Okay, so that is NASDAQ S&P. Let's move on. Let's take a look at gold. Like I said earlier, I do still have a position on this one, and I actually trailed my stop loss. I'm going to sneeze. Hold on. On the 4 hour chart, I trailed my stop loss. We had this consolidation. Boom, breakout again, another push higher. This is great. I am going to also talk about a couple trades that are not going my way right now as well. So I know I'm kind of talking about gold here. It's gone quite well. I do have some positions that are not going as well that I'll talk about. Thank you. Appreciate you. Yeah, so again, another breakout. Stop loss, I put it right below this consolidation. Like if we come back and test this area, perfectly fine. What I'd not be okay with, would we come down, test this area where bulls consolidated and pushed higher, and then we just fail there. Like that's time to get out of the trade. I'll just take my profits. Again, I've been in the trade for, and how long have I been in this trade? I've been in this trade for 15 days. So, you know, this is, you know, why I love swing trading personally, is because I can catch a good move like this, and for one action, right, 15 days of overall gains. I mean, I had to sit through this for a little while, but that's why I love swing trading. Is I'm not making 75 decisions per day. This was, you know, I did my analysis that day. Price came down to that level, nice rip off the lows, and I went long. Stops below structure. I've trailed stops to here, and then I've trailed stops to here. No, I'm sorry. I had my initial stop here. We consolidated, pushed through. Once we broke those highs, I trailed my stop here. And then today, I trailed my stop just below that 4 hour chart consolidation. So minimal work, and I'm floating a pretty good trade here. I think the P&L is somewhere in the 20s, which is awesome, 20K. So I'm going to continue to trail stops on it. And as long as it keeps making higher highs, higher lows, I'll trail the stop further and further. See how far we can go with it. Okay, so let's just take a quick look at the dollar index as well. Dollar index sitting at consolidation. My perspective on the dollar is that I would not be surprised if we pulled back, but I think the bigger picture for the dollar is still lower. Part of the reason for that is when we take a look at our economic heat map, take a look at the US economic heat map, you can see that most of our factors here are suggesting bearishness for the US dollar. Check out the new feature if you are an Edgefinder user. Highly recommended you check this out on your own end. And what we've got here is our US dollar impact or our stocks impact. I know there's a lot of people who watch my videos or who are Edgefinder supporters and customers who trade stocks or indices, and there's other people who trade gold, currencies, and dollars, right? So we have two columns now, one a little bit more fixated towards stock biases. And a quick example would be inflation data cooled last week. So we had some confusion about this. People said, Nick, if inflation cooled, how is that good for the dollar? And the answer is it's not good for the dollar, right? So the way we broke this down is this is good for the economy. Inflation is good. Inflation cooling is good, right? That's a good thing for the economy. It's not good for the dollar, right? So dollar, we've in the impact column shows you that this data, PPI and CPI coming in softer than expected or cool data, right? Slowing inflation, bearish for the US dollar, but that's bullish for stocks. Those are great. That's great news for stocks, right? So we want to understand that discrepancy. And I know a lot of traders who are trying to get into fundamentals, they've expressed that this way of displaying it makes it a little bit more approachable, a little easier to understand the economic data, the surprise that it came in as the actual forecast previous, and the impact on the US dollar, the impact on stock indices. Hopefully that helps, but that is kind of our mission with this page, is to make it as easily, I thought about this is basically a way more advanced and kind of useful version of Forex Factory. It shows you all the data, but it actually shows you the impact, and not just one thing at a time. It shows you all of the key metrics and their conglomerate or their aggregate impact on key things like the US dollar and stock indices.
We have the stock market down 1%, the NASDAQ over here down 1.6%. And I think we're in an interesting spot. This is something I wanted to go over in my weekly outlook that I'm going to be publishing a little bit later. But the stock market here has gotten a little bit of a rebound. Now, I don't want to be too bullish on the stock market because we do have important data coming out that could influence that. We have the dot plot. And other central banks are coming out with their interest rate decisions, like the Bank of Japan and the Swiss. But I do think that we are in an interesting level. We have 2 days of solid bullish candles closing. Now, right now we are in the red about 1%, but I want to see how this closes. And for reference here, I want to also look at the VIX. The VIX has been seeing a little bit of a fade away. And usually when that happens, the stock market is expecting a little bit more organic, not that much impulsive moves. And so we see the VIX kind of settle down. I know yesterday we were at the 20 handle here a little bit. But if we stay in this zone here, I do think that the stock market can rebound a little bit. Last week and the week prior to that, for the last about 20 days or so, by noon, every bullish movement on the stock market got faded back down. And so these last 2 days, we didn't see that, which is a good sign that maybe we are getting some bottoming on the stock market and that we could see some bullish momentum there. Now, I don't trade the stock market actively, like as far as a trading perspective. That's more like a long-term thing. But I do think that a bottom pattern could happen. And if I were in the position to trade this market, I would see that as one of my top 3 optimistic plays that I would look forward to take advantage of. Another thing I don't trade is gold. And if we just look at gold here, it is moving. I think buying this market, at this market price here where we're at 3,035, could be a little bit dangerous. I'm not bearish against gold, but if you're buying here, you have all this to the downside against you. And then as far as take profit goes, you don't really have anything to reference. So the safest way I would approach gold would be to just wait for some healthy pullbacks, maybe something like this here. But in a market like this that's moving so strongly, usually there's brief pullbacks, and then those brief pullbacks get bought into. So that's the kind of thing with gold. If I were to trade it, I'd be extremely patient. I know that a lot of the retail crowd, we see this bullish momentum and you want to jump right in. But we just have to remember from a risk to reward perspective that if you hop in right here and the next, I guess, best target would be something like this, well, you have all this downside that you have to look out for. So that's how I would approach gold. Those are like my top three here. Um, One thing that I would like to look over is the euro. Now, I'm a currency trader, and that's what I trade primarily, G10 currencies. And so the euro, or the anti-dollar, however you want to call it, is something that I trade most often. And so an opportunity for me would be, ideally, I like to get a pullback maybe to here or maybe to here. But like I mentioned with gold, like this euro took off almost 500 pips or so when the European government said that they wanted to commit about 500 to 800 billion dollars to their military spending. And what that can do, and what the market saw, is more participation for the European economy. It could create some growth, some more jobs, and it makes the European economy more military independent. Whereas right now, a lot of the countries are dependent on the US just because we're such a powerhouse. And so that really lifted the euro about 500 pips. And, we see that we're kind of just flirting around this level. Similar, if you look at the dollar chart here, it's basically the same thing, just inversed. And so I want to see how we react because I was listening to Nick earlier. We do have the dot plot coming out for the Fed, which could change the trajectory for how interest rates are perceived. So I want to see if there's going to be more of like a little brief pullback, or if we're going to see just straight up buying. And if we were to do that, then I would look for a zone like the 112 or the 110 area like this, because if we all zoom out here, we're pretty much in this big range. And that's the cool thing about currencies, is that when price gets to these levels, at the bottom or tops of the ranges, then you have so much opportunity, for the to target the opposite side. Now that takes a while to develop sometimes, but the cool thing is that we could have an opportunity to get back to this level. And then obviously we'd have to see what's going on in the macro to see if we are going to break this level, or if we're just going to bounce right off of that. So that's what I'm looking at. If we're looking at the edge finder here, I like the euro Australian dollar. That one's a very bullish reading for me. But if we look at the chart, it's pretty hard to trade, in my opinion, just because I don't like this level here. Like, I wouldn't know where to, really buy into. Ideally, I would like something like this. For the euro Australian dollar, if we continue seeing the bullish momentum for the euro, the military spending is definitely on the table. And if we do see the dot plot for the US start to say that interest rates are going to come down a little bit faster, or just confirming that they are going to come down, that could go ahead and propel the euro. And if we do see that happen, I could see that the euro Australian dollar is going to go ahead and continue appreciating. And if we look left for target areas, you have all of this here to target here in this zone. Now, are we going to get all the way to the here? Probably not anytime soon, but you do have levels. If you just look left, you have right here, I could see right here. Those are areas that I would target on the euro, especially. Also, guys, if we consider the Australian dollar and the New Zealand dollar too, those currencies have been getting beat up more than the counterparts like euro or the pound. If we just look at the Australian dollar, we're at a zone here, a previous resistance that once was support and that has now turned resistance. If we do see the Australian dollar kind of just bounce off of here, or just not break this level, while we see the euro appreciating faster than the Australian dollar, then we could really see that trade take off, especially considering too that the Australian dollar is a very commodity, driven currency. The price of oil affects that, and if we just look at oil here, we are also just trending downwards. So that could really help the euro Australian dollar. Good to see Bashy, Shadow, Kiddis, all the regulars here. I think I saw Lee James as well. But those are kind of what I'm looking at. I see some requests. I see, can you look at pound CAD, euro Australian dollar? Yeah. Mr. Alexander, I hope this helped you with the euro Australian dollar. Basically, if we see the euro go ahead and appreciate, we break out the zone that we're currently in and we start targeting that 110 or that 112, then I will go ahead and try to take a buy position on the euro Australian dollar. And then also, if the oil market continues to depreciate, that could also help this specific currency pair.
One thing I will say on the market right now is take a look at this resistance. It's not impossible to see that when we started this high and you connected the dots, that we hit resistance yesterday. So the bears have at least taken a bit of control in the short term. Part of me is a little bit happy to see, I mean, not super happy, make that clear, but part of me is a little bit happy to see that pre-Fed, the market is not already sitting at the pullback levels that I'm going after. So if we go to SPX, for example, this low right here is a pretty good pullback zone. Okay, this gap and these support levels here is a pretty good pullback zone. So I think the important thing for these next couple of days, or even getting through the price action this week in the near term, is if you take this down to a 1 hour chart. Look, the bears have clearly clawed down to some pretty ugly corrections, right? We had a 10+% correction in the S&P, a 13 to 14% correction in the NASDAQ. It kind of rivaled what we saw back in August with that little, sell-off from the weekend. It was like August 2nd through the 5th. It was it was August 2nd through 5th. It was a Friday through Monday, but it was really the Thursday to Monday was when things got really crazy over the weekend. Anyway, point is, I don't think this low is necessarily in, nor do I think this low is necessarily safe. But I think at least in the near term, with some of the extremes we've seen in sentiment readings, there's at least a bit of defense in here where the bears aren't clawing as hard and as aggressively. This short-term relief rally certainly felt pretty good. I just think that coming into the Fed on Wednesday, look, the Fed isn't going to cut rates in March. It's not an emergency cut. I don't think that their plan for 2025 would be to do anything that's emergency. I think the Fed is still planning on cutting this year. I think we'll see that in Powell's comments, whether it's explicit or not. But the data is pointing that inflation is improving. The watch tool still shows and suggests there's going to be 2 to 3 cuts this year. So right now, I mean, I'm sure my boy Charlie Bolello's probably like, tomorrow's news today, Fed's going to pause. Well, obviously, a 99% probability it's probably the case. But you go to, what are they doing in May? Right now, May is an 80.5% probability that they remain paused. So unless they say something tomorrow that shifts this probability earlier, maybe they cut in May. Now, what does the market do to that to respond with it? I don't know, right? But right now it's forecasted for a June cut and then a September cut. And what's interesting is I don't see a third cut on the horizon except into 2026. So right now this is forecasting 2 cuts through the rest of the year. Could that change? Yep. All this can change. I took a screenshot of this and we'll compare this again on Wednesday. So if I go to the Fed watch tool on the 11th, so March 11th, 11:14 a.m. Well, this is different. CPI, PPI changed. Nope, it didn't. It changed a little bit, but now we have more of a pause going into May. This is 53.9% for May, and currently it shows 80.5. So that pause is more sustained. Again, does that change this week with the commentary on Wednesday? Maybe. But price action wise, expect there to be some noise at these lows. Listen to a couple interesting macro podcasts yesterday, and look, I think the biggest concern is that we are seeing a pretty aggressive rotation out of the U.S. right now, and here is evidence of that. I pulled this from Praetorian Capital, which is Harris Kupperman. I followed him for a little bit. He's a I don't even know what kind of investor you'd call him. He's just very non-correlated. He's just like a deep value investor. But he is in like a bunch of non-US and mostly commodities. He's been in the energy space, uranium for a while. But I'll just show you this image. This is a bunch of non-US assets. A Poland ETF is up 36% year to date. Austria ETF up 25.7 year to date. China large cap ETF, that's FXI. That's been a stock I've been in, or an ETF I've been in since last year. Had a big rip in September and still following through, up 23% year to date. We've got Greece, Spain, Germany, Colombia, Chile, Italy, Sweden, Finland, all 20+% year to date. So my profit target on staying long the Aussie Swiss, and there's bigger profit targets to me. I don't know if we're going to have a run back into 7,000, but eventually if we can hold this like flash crash low here, we might even come back and retest it. I'm still not done. Like this, when it's all said and done, this is going to be just a monster bottoming pattern. And one thing I'll be watching would be, let's say that we end up going back up into, I mean, my profit target set at right around 59.80. Okay. And that's like target one. But if we end up holding this low, and this is the really simple move, let's say that we slide lower, channel, come back and retest this flash crash low from August of 2024, and then we come back into the center high. Well, that is a center high. That would be a double bottom. That would get all the way back into, let's say, 6,000. Right? So that's where my profit target is really going to be. That's where I want price to go. Am I going to have to be patient? Yep. We're going to have to see that this week. The Swiss National Bank should be cutting rates on Thursday, or did they already cut last week? I think it's this week. We have FOMC pausing, Swiss National Bank on Thursday expecting to cut 25 basis points. Also, the Bank of England expecting to hold and stay at 4.5. So, all right, let's take a look at the dollar really quickly. So, dollar index. And because of this aggressive shift, if the dollar continues to weaken, one thing that may be wild and crazy, and one of the craziest trades of 2025 would be if this dollar falls into the 100 to 101 level and doesn't bounce. I think that might be my biggest. In the FX land, like that would be insane and probably unprecedented to see that the dollar started here and went all the way down here. That is even more conviction, again, if this happens, that's even more conviction on a non-US dollar play. That's also more conviction on a non-US market play for 2025. Now, is that going to happen? I have no idea. But, you take it in chunks. If you're short the dollar right now, you know where to be moving stop losses at least. If this thing blasts lower, well, guess what that looks like for gold? Probably looks good for gold, right? Gold's trading up above 3,000. I haven't really seen any major profit taking. I still see a lot of divergence on gold as well as a very high bar count. So I'm still cautious of this, daily overbought condition, the weekly as well. I mean, we're extremely overbought in the weekly with divergence. So, I mean, again, and this isn't like calling a top in gold. I just think that we're going to have at least like a slow climb as price and momentum are clearly disagreeing. So prices made fresh highs, disagreement. Prices made fresh highs, hidden bearish divergence on overbought conditions on a relative strength that is hard to get to, by the way. This is a weekly chart with an RSI at 21. That is a hard level to get to overbought conditions. But it's still overbought. I still think the bar count is something to pay attention to. But I'm curious, how many pivots we have missed along the way, how long we've gone between bar counts. Last time we touched this 200 moving average was, I think, 360 bars. About 367 bars. So that was the same reason that I was bearish on Meta and Netflix and Costco and the S&P and the NASDAQ and all sorts of stocks this year. Because we had a crazy high bar count and we overstretched where the percentage away was pretty high. So I'm curious if this is a, kind of a Q1 play that then changes a little bit in April, and we just get some shifting. That's all. I still like buying the dip on gold. I just want to see if there is a dip. Okay. All right, that's gold. Let's keep going. So top down, markets are down a little bit today. A couple things coming into the Fed for Wednesday. I still think the pullback zone is right around this 5750 to 5800 zone. Like I said today, I mean, it's kind of nice to see that the market is still pretty calm pre-Fed, as opposed to just a big fat slap to the downside or just some crazy rip before the Fed even happens. So Fed matters tomorrow. We'll see what happens.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.